So, is it time to buy or sell Oats futures? First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we go here to natural resources, and oats is part of the grains. So we have it here, and I did an analysis of this one on the 29th of August. So let's have that in mind. So the 29th of August. So I remember that I was bearish. So let's find 29th of August. So this is the point where I released the video. So I released it for the week that started here, and we did get a correction, but this was a very shallow correction. So let's actually measure how spectacular that correction was. It was a whopping, minus 7%. It's decent, but obviously it soared higher, so I expected more, but we did at least get some kind of correction. So yeah, I will call that one a win. But it's pretty clear that the bulls went absolutely berserk. The key thing about these kinds of moves is that you have many things, many kinds of investors that can fuel a bullish move. Obviously, you have the bulls, but you also have short covering. So you should also be aware that a significant part of this move is most likely short covering. If you are going to short anything, you should have a stop such that if you were to be short like this, you would be maybe your 7% gain would be like maybe stopped out at like a 4% or something like that. You obviously are not going to hold on and let it go this much against you. Be that as it may, I do think that this is a bit of a phony rally, which means that it could become interesting for the bears again. But I do think that we will see a more substantial gain this time around. So here are the time cycles. The time cycles do suggest that we have a declining phase here, heading into 2023. So these are major time cycles, and you can see that over a long period of time, the time cycles have been pretty good at calling the major impulse. So let's do some more in-depth analysis. So let's look at some of the previous, euphoric rallies. So here you have this major reversal candlestick here. Then we get weakness here as well. Well, let's actually look at these other indicators. Have them with us here. So let's do it like this. Zoom out a bit. So this is the major bubble move we had in 1988. So when you can see here on the right side and the left side is that this cursor, they track each other. So here you have extreme RSI, extreme PPO, and then you had the pullback. Here, something similar, you have this reversal candlestick, and you can see here that the RSI and the PPOs, they were at these extreme levels, and then you had the reversal. Here again, you have something a bit similar, but the bulls fought a bit more valiantly, but eventually the bears, they won. So now we are traveling towards our current time frame. So this is 2008. Extreme readings on RSI and PPO. The interesting here, okay, so this is before the global financial crisis. The current RSI today is higher on the weekly data points than what we had before, this major bear market. The PPO, just look at the PPO, the distance from the 20-week moving average, the 50-week moving average, the blue 100-week moving average, and the red 200-week moving average are at records. We haven't seen these kinds of obscene levels before. In this time where we had lower levels than today, we were more modest. We had an absolutely spectacular bear market that followed. Here we were very modest compared to the current readings, and we had a substantial bear market. Let's measure the big bear, a pretty whopping minus 74-ish%. So yeah, the current readings we have here are absolutely extreme. Look at the MACD. We haven't seen anything like that before. It's ridiculous. We can actually look more at history here. So here you can see, all the PPO. So we did actually have a more extreme PPO here in 1988. That's something we just have to be aware of. But throughout the vast majority of the history of Oats, the current readings have not in any way, shape, or form been favorable for the bulls. They have actually been favorable for the bears, historically speaking, over a very long period. That's just the reality of the situation. And we are, interestingly, like in previous times where we had substantial bear markets for oats, we do see a bit of a reversal candlestick here. Is this the top for oats? Obviously, that's hard to call. But if I were to put on a position, I would feel way more comfortable being short oats at these levels than going long. So like if I was like awarded, okay, here is like 100k, but let's say that I win 100k and but I'm forced to either be long or short oats for a year, I would easily say, okay, just put me on, make me short oats for the coming year. I think that I will be able to exit that with a higher gain than if I was forced to be long for 1 year. Jumping to the daily data points here, we do see, extreme readings. So the current readings have not in any way, shape, or form been favorable to the bulls historically. Even though, yes, they are currently in control. Here are some correlations. We have a 80% positive with the S&P 500, 66% positive with the agriculture ETF, the DBA. Oatly is something we will see on the daily data points, and minus 41% here with the dollar index. Looking at the daily data, okay, unfortunately we do not actually get Oatly even here on the daily data points. So I think I have to modify here the number of data points a bit. 56. So Oatly, it's it's one of those companies that makes these milk alternatives. So it would be just interesting to see what is the statistical correlation here between Oatly and oats. We have very little data, but the data we do have show that we have an 89% negative correlation between Oatly and Oats Futures. Okay, DBA, 64% positive, 79% positive with the S&P 500, and 78% positive with the dollar index. Okay, so to sum up my take, okay, and also let's look at the seasonality. This is the seasonality for the grain index. Over the last 5 years, December and January have been strong. Over the last 14 years, November has a tendency to be weak, but December is strong. So to quickly sum up my take, looking at all the history we have here, it is very clear the current readings have been favorable for the bears, not the bulls. This is a very dangerous time to be a new bull. Oats are obviously in a bubble.